This is your brain when you're struggling to focus.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you. It's dropping on August 6, 2025, which is my birthday and my youngest son's birthday, for $69.99. Yes, $69.99 for all of this here. Mark the date, set it on your calendar, remember it, and I'll see you on August the 6th. Good evening, everybody. How you doing tonight? Let me stop this from playing in my ear. How everybody doing, man? How y'all doing this evening? Who we got up in here? Let me see who up in here, man. Before I look to see who up in here, first of all, wait a minute. What is that? Hold on, y'all. I got to get myself together. Okay. Before I look to see who up in here, let me say good evening. If this is your first time tuning in to Tim's Tidbits, make sure my mic turned up. My mic sounds nice, check 1. My mic sounds nice, check 2. Yeah, I sound good. I just had to check the sound. You know, when I be working on the Smart Money Manuscript, I have to turn my mic down, right? But when I'm on live, I have to turn the mic up. And so to make sure I'm in focus, there you go. What's going on? Get in focus. All right. And so when I'm on live, I got to turn the mic back up. And so I'll be having to check to make sure I turn the mic back up so I don't be low. Because this morning when I got on the tape reading stream, honey was like, you're a little bit low. I couldn't hardly hear you. So I had to make sure my mic be turned up. Now, good evening. If this is the first time tuning in to Tim's Tidbits, please allow me to say welcome. But if it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. And I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Araña Grande. And that's just Big Spot if you don't hablo Espanol. And you're now in tune to another episode of the Price Action Recap, as it said in the beginning. And as you saw in the beginning with the advertisement, if you'd like to partake in the Smart Money Manuscript, please do so. Coming August the 6th. If I don't drop the ball and not finish this, I've put out a date when I said I'm going to release it. And now I'm working day and night trying to get it done. Y'all know you, man. Look, man, I've been retired since 2021. Man, has it really been that long? Man, I've been retired since April 30th, 2021 was the last day that I went to work for somebody else. And since that day, my level of not committing to anything has been on 50 million. If I tell somebody I'm gonna do something, man, I be dreading the day for that to come up. I'd be like, why did I tell them I was gonna do that? I hate committing to anything. I don't want to do nothing that I don't want to do. If it ain't, I don't care if it's just, if people be like, but you don't do that. I just want to sit at my house. That's all I want to do. I want to wake up, look at the charts, after 11:30, go to Sam's Club, get me a slice of pizza, people watch for a little while, talk to my mom at 1:00, come back, lay on the couch, take me a nap, wake up, look at something on Netflix, take a shower, get into bed, and start all back over again the next day. That's all I want to do. I don't want to do nothing else. Don't be asking me to come to your functions. Don't be asking me to help you do nothing. I don't want to do nothing. And when I commit to something, I'll be like, man, why did I say that? Why did I say I was going to do that? This is why it be taking me so long to put stuff together, because I don't be having time to do it. That's why I do live stream videos. I live stream because I ain't got to go back and edit nothing. But when I be putting together the courses, I be having to edit stuff, man. I be having to go in and edit stuff. I'll be like, man. Speaking of courses, y'all want a sneak peek of the course? Oh, we already did that before. We did the sneak peek of the course before. We ain't got to do that. Yeah, we did the sneak peek of the course before. Yeah, we had did we did a sneak peek of the we did a sneak peek of the course before. Hello, everybody. What's up, Tim? Oh, that's my dog. That's my dog. What's going on, man? What's going on, young blood? That's my boy. I ain't seen young blood in a month of Sundays. All right, man. We did a sneak peek of the course, so we ain't got to do a sneak peek of the course right now. The gang, they had opportunity to like look at how some of the stuff, how the course was laid out. They had opportunity to take a few of the tests. Overall, they did good. I was pleasantly surprised at how they did with the tests and stuff like that. They say they like the feel of the course thus far. So yeah, I just got to get on it, man. I've been working hard, but my mama be interrupting me, be calling me when I'm trying to work.
Then my brother don't get on the call, and then he called later, and then my son leave the garbage can in the middle of the kitchen, and that frustrates me. Then I got to go to Sam's and get me some pizza, and then I be having a whole lot going on. Then you know what I'm saying? Them folk over there, Sue Record, they at me about that money. I owe them people a whole lot of money overseas work. Then I got that show in San Antonio, and then I got. Hey man, let's get to it.
All
man.
right, Ike Turner.
Yeah. What's
so
up, man?
people at Sue Records.
Who up here? I forgot
Tone,
who up in here. I hear Lump up in here. What's going on, Lump? My dog Youngblood up in here. We got Jim up in here. We got light skinned Deborah in here tonight, y'all. If light skinned Deborah here, then I know my dog Sherwin here. We got Marco up in here. We got LB. LB said, ready. I got stopped out this morning. Oh, hold up. When LB put that in there, it made me think about something. I didn't share the link in the I didn't share the link on the YouTube. If Price did anything today that caught you off guard, if you was like watching, you know what I'm saying? If it caught you off guard, you see how I just caught you off guard just did. I'm sorry for all my black viewers. You know what I'm saying? The way I if I scared you, I jollipize, right? I know you light-skinned Deborah, she grabbed the strap. She grabbed the strap. Light-skinned Deborah grabbed the strap, but it's okay, right? If Price did something that caught you off guard, feel free to pull up on the Zoom link and unmute and say, hey, Tim, I was expecting this. Let's look through Price and see what signature that I missed to help me not get stopped out the next time, or help me not sit there wasting my time waiting on something to happen that is not going to happen. What signature did I miss? Help me out. Click on the Zoom link that I just shared, pull up, unmute, and share what's on your mind, man. We got Rhonda Green up in here. Hola. We got Sarah. What's going on, Sarah? We got Kim up in here. We got Seawalk. Shout out Seawalk. We got Steve up here. What's up, Steve? Sonia. What's going on, Sonia? I'm assuming LB is Lamar Brooks, because Lamar Brooks just popped up in the Zoom. I didn't see that before. We got Venus up in here. What's up? Okay. See a few more numbers than I see names, but them not all the names I see. So that's all I'm going to say. Let's go ahead and get to it, y'all. Let me share my screen with all of you. There you go. I'm sharing my screeneth. Y'all should be seeing a chart that says NQU 2025-15, right? It's the 15-minute time frame for the NQ futures, right? This is today's price action starting, if you follow the bouncing ball, starting right here. That's what we started last night at 6 p.m. All right. We started there last night at 6 p.m. Now, today, right? Today. Let me stop playing. Hey, today, price during the New York session, it just went up. It was up and it stuck. It was up and it was stuck. It just went up. See? And then got stuck. That's it. And then this afternoon, right? It went up a little bit. And then we just had a slow trickle down until the end of the day. All right? So this right here, right? That's no surprise. Why is that no surprise? Right? What happens when the market makes a large expansion move? Somebody tell me, what happens when the market makes a large expansion move? What does it do? It
Go
what?
Goes to sleep.
Go to sleep. Hey, it's gonna go to sleep, right? Whenever we get a large expansion move, right? We expect the market to kind of hang out a little bit. And if we do something like this on a daily time frame, right? What do we anticipate? If we get like a large range on one day, right? The next day we be kind of anticipating what? Hmm? What would be it be?
Burger.
Huh?
A nothing burger.
Yes. It ain't it. Why it's not in my folder, man? That's supposed to be in my folder. I was supposed to be right there. I knew somebody was gonna pull up with the right answer, and I was supposed to be in yes, inside date. Very good. Where's why my sources ain't showing up? My sources ain't showing up on my little shortcuts no more.
Go to use a lot.
Huh?
Go to use a lot.
No, use a lot is where it's supposed to be. That's what I said. It wasn't in used a lot. All right. Boom. That's what we'd be expecting the next day. A big fat nothing burger with cheese. Hear me. Right. So it's a typical thing. I mean, it's a normal thing. It's actually a healthy thing for price. If we get a large expansion move for it to just chill out a little bit. All right. So this morning when we was on the tape reading stream, right? When we was on the tape reading stream this morning at 9:30, and the price just started doing this, right? What do we do? What are we gonna do? What did we do on the tape reading stream when price was just going straight up? Who remember what we did?
Sit on our hands.
We sat on our hands. We set some projection levels based off of institutional market structure, and we just sat there and said, "Hey, it hit that level. Hey, it hit that level. Hey, look at that." Why? Because when it's just running off, it ain't nothing for you to do. All right. You don't want to go out there and get FOMO and try to jump in chasing price. Can you get lucky and just hop in and have a big enough stop where it doesn't come back and get you and just ride it up? Yeah, sure you can. But when the whole purpose of the ICT concepts is so that you understand how to engage with price in the mind frame of smart money, right? Where does smart money buy? In a premium or a discount?
In a discount.
Smart money buys in a discount, right? So this is where we opened up at 6 o'clock last night, right? This is, let's find 9:30. This right here is the 9:30 open. All right. Fatten that back up so we can see it. Come here. All right. So that's the 9:30 open, 9:30 opening price right there, right? The high, the top side of this purple box right here is where we opened up last night at 6 o'clock, right? So that's the open of the day based off of the futures trading market. This green candle here, where this black horizontal line is, that's the midnight open, right? Let me copy this right here. Just gonna make this. I want it so y'all can see it better. Right. That's why I made it fat there. Okay, so the atop this purple box, right? That's the opening at 6 last night. The bottom, the opening of this green candle right here, that's the true day open. That's when the algorithm starts a new day. Okay. And this right here is the open of the New York session. So all of these right here are key opens, right? Right. All of these are key opens. Okay. What do you notice about all of these opens? Right. Somebody tell me, what do you notice about all these opens on this day right here in particular? 6, midnight, and 9:30. What do you notice about all of these opens right here? What's going on, Empire Traders? Empire Traders, you still running up them prop firms, Empire Traders? Huh? Light skinned Deborah, what you notice about these 3 opens on this day in particular? Just give me one thing you notice about them. Oh, she gonna pretend like she can't talk. Lump.
Oh, I can't talk. I'm just trying to figure out what you.
Me too. They all all bullish. They're all green candles. But you say what was the times?
This is 6 o'clock open right here at the top of this box here. This is the midnight
all
open.
those are new.
But just on this day in particular, just tell me something that you notice about all 3 of these times, right? It's a couple things, right? It's a couple things that you can notice, but what do you notice about all 3 of these times? Price returned back to him. Very good, Sonya. Price unwilling to like really leave him alone. You know what I'm saying? Throughout the night.
The range.
Right? Price unwilling to leave him alone through from last night up until 9:30. Price is hovering around. It go away, come back, go away, come back. Price ain't willing to like really leave him alone. Right? About to get a payout. Shout out Empire Traders. Hey, Empire Traders. All that hope I don't jinx it mess. Ain't no such thing as jinxing. We formulate the plan, we execute the plan. We trade what we see. We don't trade what we want. Hear me. Ain't no jinxing. Talk about jinxing. If you worry about jinxing, you going to get off my life. Hey, so unwilling to leave them, right? And then they're all hovering around the midpoint of yesterday's range, right? Because if you can't eyeball it, that's why I ran the Fibonacci tool. And you can see right here is like the middle. They're all hovering around the midpoint of yesterday's range, right? And so what happens at a midpoint? What does the midpoint equilibrium, what usually happens around there, right? What usually happens around equilibrium? Somebody tell me.
Consolidation.
Consolidation. And when prices consolidate, and what is it doing?
Engineering liquidity.
It took him a while, but he got it. Engineering liquidity. It's engineering liquidity, right? So when price is engineering liquidity, right? It's baiting dumb money into trying to force things, right? It's baiting dumb money into trying to force things instead of, that's why I said, when price just took off today, like this right here, and it wasn't giving any kind of signatures that it was going to do anything but just go up. Okay, baby. Yeah. Yeah. Let me know when you get back, girl. Yeah. I love you. I hate to see you leave. I hate to see you leave, but I love to watch you go. Bye, baby. Love you. Hey, Marco, you unmuted. Don't say nothing freaky. But here we go. But so while it's when you come into the day, right, and you notice price is just kind of in the middle of the road, you just want to sit back, chill out, and see what the algorithm does. You don't want to try to jump in trying to force anything, right? You don't want to jump in trying to force anything. Okay. And so with that being said, right, when we squanch the charts up, squanch, that's a bona fide word, right? This hit from this low up until this high right there, right? That's last week's range, right? When we're going into a new week, we like to reference the previous week's range so that we can see where we are in price. Okay. So this is last week's low. This is last week's high. When we opened up last night at 6 o'clock, where are we in the current dealing range?
Premium.
We're in a premium, right? And when I asked, where does smart money buy, right? Everybody agreed that smart money buys in a discount, correct? That's what everybody said. I don't remember nobody saying premium. Everybody agreed that smart money buys in a discount. So if we come into the charts, right, and we see in our current dealing range on the higher time frame, we are in a premium and the overall market is bullish, right? Tim, how do you know it's bullish? Because we've already been stating we're in a buy program, right? And then last week, right, when we came up above this high here, we extended the buy program, right? So now we've extended we extended the dealing range. The buy program is still intact. So now this is the latest dealing range that's in our overall dealing range there that we're watching is last week's range. This is a algorithmic time frame that the algorithm understands. I made that low, I made that high during a certain time window. So it's going to reference this. Why? Because we've come into a new week. So now that we've come into a new week, we're looking back at the prior week. What are we looking at the prior week? Right? When we start a new week, when we start a new day, when we start a new anything, when we look back to the previous one just before it, right? We're looking to see if we're trading near what? And we want to see it engage what? Are we near what? And what do we want to see it engage?
That previous week or previous session or day's liquidity.
Liquidity. Very good. We're looking back at that previous whatever to see if we're trying to engage liquidity, right? So where is the liquidity in the previous week? Where is the liquidity in the previous day? Where is the liquidity in the previous session? The liquidity rests where? Man, I ain't come over here to be going to school and asking all these questions. I came to attempt to get a crystal ball and tell me what's going on.
Below old highs and lows where the liquidity resides.
The liquidity is going to rest below lows and above highs. So when you look at your prior session, your prior day, your prior hour, your prior week, your prior month, that's why we put our box bottom and our box top. Why? Because on the outside of the box, inside of this algorithmic dealing range, this is external liquidity, right? External liquidity rests above highs and below lows. So when we open up a new week right here and we're in a buy program, right? What do we want to see the market do before we try to buy? We want to see the market do what?
Take out an old low.
Take out a low.
A low.
And when it takes out a low, right, preferably something that's dealing with our higher time frame, because we're trying to position ourselves in the best possible position for the higher time frame. Yes, we could intraday scalp on lower time frames, but price is fractal. So we're just talking about it in the case of this weekly time frame. All right. So if we open up in a premium, right, and price takes off to the buy side, it just takes off going straight up to the buy side. Are we looking for a reason to buy up here? No. Why? Because we buy in a discount and we sell in a premium. If the algorithm, right, is in a buy program and we're looking for a reason to buy, right, we're not buying up here. We're not looking for a reason to buy up here. Okay. We're looking for the algorithm to come to a discount, right, and give us a reason to buy. Okay. Now, for this dealing range here, okay, anything below this daily fair value gap is in discount. Anything below, why? Because this line here is equilibrium of the over of our previous week's dealing range, right? It's equilibrium when we first opened up, right? Now that we've extended our dealing range even more, right? We take the high and we move it up to the highest high. Now, anything below consequent encroachment of this daily bullish fair value gap is a discount, right? So anything below here is a discount, right? Now we're at all-time highs and we have nothing to look over here and shoot for, right? We discussed today on the live stream. I'm not going to get back into it here, but we discussed today to figure out targets to the upside. Just how far can we go based off of what? What type of structure do we look for to anchor our Fibonacci tools to get our projections on how far the market can go when we're at all-time highs? What type of structure are we using to anchor our Fibonacci tool? Y'all hold on for a second. I'm listening. You can answer though.
I don't know when brain dead. I know we went over this morning.
You anchoring it from
Extensively.
that point where we took off our expansion to the
What type of structure are we looking for?
low high? No.
What type of structure are we looking for? It's one word. What type of structure?
What did
You know, structure that from one. You said one word.
It starts with an I.
I don't know.
Implosion.
starts with an I.
I.
Implosions.
Do your work.
And all us we was on here this morning.
Internal.
I'm asleep. I'm asleep.
Tim, why can't I just say we drive from here to there? And then
No, go put the spaghetti, please.
Where Jade at? Is Jade on here? Where Jade at when I need her? Where Jade at when I need her?
Imply.
Oh my goodness. I hear embarrassing me in front of all these people on Algo's in there. I ain't buying this man course. His own people don't know what he talking about.
Internal. Institutional.
institutional market structure.
It's the institutional market structure, Tim.
When we get evidence of the institutional market structure, we have the place where we know that we can anchor our Fibonacci tool. And when we anchor our Fibonacci tool based off of the institutional market structure, we have precise, highly probable price points, not just a ambiguous spot in the great blue yonder. We know it can go to 22,000 for whatever that 22,000. We know it's got a high probability of going there because the algorithm left specific signatures behind, and we use the Fibonacci tool to peer into the future and see where the algorithm can reach to. And there are certain levels when we can anticipate a pause or a retracement. There are certain levels that we can anticipate a reversal because it's done so much. It's certain points that a retracement. It's certain levels we can expect it to retrace to based off of what it's left in its path, right? There is if you're trading, right? For example, if you trade this right here, right? This dealing range here, right? So looking at this dealing range here from this low, right, to, we'll just go to this high right there, right? Because we're gonna chop this off. Take it off, right? This is Friday's, some of last week's trading. It ain't just Friday, but some of last week's trading. So looking at this dealing range here, right? We came up and we made this high right there. Okay. Looking at this range here, let me chop this off too. Chop that off, right? Looking at that range there, okay? What do we notice about this dealing range right here? Focusing more so from here down. What do we notice about this dealing range? Focusing from here down on this dealing range here. Y'all should be sounding off right now.
Balance price range?
Yes, this down here is efficiently delivered, right? The lower half of this dealing range is efficiently delivered, right? Whenever we get a dealing range, right? If it's a bullish dealing range and the discount is efficiently delivered, or if it's a bearish dealing range and the premium is efficiently delivered, right? What do we focus on? The latest what?
The latest displacement leg.
The latest displacement leg, the latest expansion, whatever you want to call it. So in this case, this is the latest displacement leg / expansion of this dealing range right here. Okay, so this is efficiently delivered. And so now I already told you why, because we're focusing on this latest expansion leg because this is already efficiently delivered. So since this is efficiently delivered, and then that move right there, what did this move right there tell us?
That we through with that area, so we left.
And why are we through with it?
Because we displaced away from that area above that structure.
And what it displacing away from that area tell us?
That area has been sufficiently
We know we can see it's efficiently delivered, but what does that move right there tell us?
That the buy program is.
Yeah, that too. But this move right here
Lord.
tells us that the algorithm sees this as what? Phone a
Price
friend.
range.
Phone a friend. Say again.
A balanced price range.
Balanced price range.
I thought we already said that. That is beneficial. Okay.
All right. Okay, so it's efficiently delivered. The discount is efficiently delivered, and we left that area. So now that's a balanced price range, right? So now that this is a balanced price range, right? We said we're focused on the latest displacement leg. So the reason we're focusing on that latest displacement leg is because since we have a balanced price range, the algorithm should use this as support and not go back down through it. And as we see right here at the low of our latest displacement leg, what did the algorithm do? The algorithm retraced back down into that balanced price range and created this dealing range right here, this latest displacement leg there. So the algorithm has proven to you here, this is a balanced price range, confirmed it by using it as support, and then displacing away, creating a new dealing range. So now we should be looking to do what inside this dealing range right here? What should we be looking to do inside that dealing range right there?
We should be looking for PD arrays that support price continuing higher for us to disrespect.
Okay. But yeah, but if we're looking for PD rates to support price, what should we be looking to do? Buy. There you go, Kim. Buy. We should be looking to buy in this dealing range right here. We shouldn't be waiting for price to come back down to the discount of the entire range to buy. Why? Because the algorithm just told us I'm finished with this and I'm not going back down there. So we're looking for a reason to buy inside of this range here, right? Where do we buy? In the discount or the premium? We buy in a discount, right? Where is the discount? Anything below this line right here. Why is that? Because this is the highest high, this is the lowest low, and halfway in between the highest high and the lowest low is equilibrium, right? This is extreme premium, extreme discount, equilibrium, or fair value. Anything below fair value is a discount. Anything above fair value is a premium. So when we open up, see right here, this right here, the price closed right there. So when this next candle, next hour, next whatever, next, right? Remember, this was our next day right here. This is where our next day started. This is where our next midnight day for the algorithm started. So this is next day, right? All of this is the next, right? We're going into the next there. So we're looking for reasons to buy, right? And now let's play this out some. There we go. Yeah. All right. So when we made this high, right? What did price do? Price came back down to where? A discount, right? And it made a low, right? So when price came back down to a discount, it made a low inside the discount right there. So it came down where? To a discount, right? And then it made a low. And then price moved up here and it made a high right there. This low right here, right? What do? We took out sell side liquidity. This high right here, what do? We took out buy side liquidity, right? Does that sound familiar to anything over here? Oh, yes, it does, Tim. That's a dealing range. All right. Come here.
I have a question.
All right, hold on. Run our Fibonacci tool there. Boop, right there. What do we notice about this dealing range from here down? Tim, you're giving me deja vu. Stop it. It's efficiently delivered right there. This move right here away from there, what does that signify? This is a balanced price range because we left it, right? So now we got a balanced price range in the lower portion of the dealing range. So now what do? We focus on the latest expansion of that dealing range, right? What do we have in the discount? We got an order block. We got a new week opening gap. We have a bearish inversion fair value gap. Price comes back down to the discount. And then at 9:30, well, before 9:30 really, but at 9:30, nothing can stop me. I'm all the way up. All right. So when we come in at 9:30 and we move up to this buy side, where are we once we reach this high? Because we come in, we say, hey, we engineered liquidity there, right? We got a low here. We want to see if price wants to take that liquidity or if it's going to leave it for later and come take some sell side and then go back and get it because it's engineered the liquidity, so it's going to go get it. So now we're looking for a reason for it to engage with this right here. Prior to 9:30, it drops into a discount. And then at 9:30, before 9:30, really at 9:15, it takes off to the liquidity. Nothing we can do about it. Why? Unless you got in pre-market, right? If you trade pre-market, well, that was your entry. Why? Because we buy in a discount. We came to a discount of the dealing range. Well, Tim, I thought you said this. It is. But when you watch the algorithmic signatures, you can see where the opportunities are. Right? What's the question? Who said that?
Yeah, that was me. Joe.
Joe. What's up, Joe?
So how you doing? So twice now you've identified areas where price was efficiently delivered and then expanded out of those areas. I think you described that as the beginning of a new dealing range.
No, the new dealing range is when you take out liquidity on both ends of the price leg. That establishes a new dealing range, right? Because you can have a dealing range within a dealing range. Like, for example, here, right? Price drop down. See how price dropped down here below these lows, right? Once we took out them lows, we established a new liquidity pool, right? Once we traded back above these highs, we established a new liquidity pool. So now this is a dealing range right there, right? And as we continue to go up, right, the low don't change, but we continuously extend the top of the dealing range, right? So we extended it there because we traded above more highs, right? Then we extended it to here because we traded above that high. And then when we retrace back down, right, we didn't take out the low, right? So we still have this low is still intact, and this is still the bullish dealing range. But as we came down, what we did, we started to create bearish dealing ranges, and we took out that low. We got a bearish dealing range. We extended it down, extended it down, extended it down. So now we have a bearish dealing range inside of this bullish dealing range right here, right? So now, but the overall order flow is bullish. So you can trade against the grain and take shorts, but now you're just waiting for price to come back down to a discount so that you can buy because the overall order flow is bullish, right? So your dealing ranges is established when you take out liquidity on both sides of the range.
I got you. So what would be the fallacy since we see price has been efficiently delivered and we believe, if not know, that that area is going to serve as support? What would be the fallacy of going long as soon as we see price leave that area?
There's nothing if that's a part of your analysis, right? There's no law that says I have to wait for a retracement, right? We talked about this. We talked about this the other day with Yolanda when she was like, "Oh, I entered it wrong, or I should have waited." No, you didn't enter it wrong because your analysis said that we have for here. Let's talk about this. Let's talk about it right here, for example, right? We came up here and we took out the buy side. We're bullish, right? We came up here, took out the buy side, and then we came down here and took out the sell side. Once we took out the sell side, right, now we get our institutional market structure here, right, where we engineer liquidity, right, take our buy side, immediately engineer more buy side liquidity by tricking people in short, making them put their stops there, right, and then reversing on them. When we see this right here, right, because the order flow is bullish and because we know what this signature means we have come back down to a level that should be a protected low, right? We've come down that should be a protected low. We have manipulated shorts into the market to engineer more buy side liquidity, right? So now we see these trap traders there. Once we come back up here, as soon as we trade back above there, right, there's nothing wrong if you say, okay, I'm going long right here and I'm putting my stop at a certain point. The safe stop is always below the swing low or above the swing high. There's nothing wrong if you just got in right there and said, I'm getting in now, because as soon as I see that, I'm getting in now because I know price is not coming back down. Or as soon as it blasts off and show you, okay, this is a balanced price range, you just get in there and say, I'm putting my stop down here because we shouldn't go back down there, right? Ain't nothing wrong with just entering there. You would just have to weather any drawdown that you get in there. There's nothing wrong. There's nothing wrong with the way you enter, right? It's just you want to enter based off of algorithmic signatures, not I hope or I think.
I got you. Okay, clear.
All right. So yeah, and as you see, right, as everybody can see, we was talking about where we was at. This area here, it did the exact same. Wasn't we before? Because I was just out. Oh yeah, the dealing range. We're looking at this here, and we said this was efficiently delivered, and then that move there let you know it was a balanced price range, and price should use it as support to like go up, right? And then when we went and looked at this area here, right, price came down, right, took out the lows, retraced back up, pushed down, swept that low again, and then traded back up, get a break in market structure. So now this dealing range there, efficiently delivered there. We leave that area, balanced price range, focusing on the latest expansion leg right there. Right now, this is your entire balanced price range. So this right here was a twofer, right? This was we gonna make up a new word, a twofer. We got a twofer right here. We never use twofer in this trading word. That's why I said we gonna make it up right now, right? Because this whole area right there is a balanced price range. Okay. So if you look here, if we run our Fibonacci tool from there and put it on the high right there, you say, well, Tim, when we retrace down right here, get on there. When you say, Tim, when we retrace down right here, we didn't come to a discount, right? Very wise of you to notice that. But if you notice right here, right, there's another piece of price leg there that's above this entire balanced price range right there. And we indeed came to a discount, swept out liquidity, traded into an order block, and then displaced up, right? So when you come back here, looking at this actual range here, once we got over here, right, coming into the New York kill zone, right, coming into a new session, because right here, this all of this price action right here, this right here is all Asian, this Asian price action right here, right? Oh yeah, it's getting good right here. Oh, this is getting good right here. We're gonna go here, put that there, put that there. We just gonna go with kill zones. We're not even gonna go with the whole, we ain't even gonna go with the whole session. We just gonna go with kill zones right now. We just going with kill zones right now. We ain't even gonna go with the whole session. Mama, can't you see what this trading has done to me? Mama, can't you see? Now, right? Who knows what the Asian, the London, and the New York sessions make up? What does that make up? The Asian session, the London session, and the New York session. What does that make up?
A day.
A day. Very good. It makes up a day, right? The Asian session, what do we have highlighted right here? We got the Asian kill zone, the London kill zone, and then the New York morning kill zone, right? I should have put AM, but the New York morning kill zone right there, right? So the Asian kill zone is the first kill zone of the day. The London kill zone is the second kill zone of the day. The New York kill zone is the third kill zone of the day, right? These three sessions make up the entire day, right? So when we, just like when we trade, what did I say? What did I say going into a new week? What are we looking at? What are we looking at going into a new week? What did I say we looking at going into a new week?
That previous week's highs and lows.
We're looking, yeah, exactly. We're looking at the liquidity from the prior week, right? We're looking at the liquidity from the prior week. Right? Okay. So, right, we had our Asian, right? Our Asian session, right? We came up, our Asian session, we dropped down, right? We already talked about this area here, right? We talked about here, we came back down to a discount of this range right there after trading above this balanced price range, right? Then we went into our London kill zone, right? When we open up our London kill zone right here, okay? When we open up our London kill zone right there, where are we trading in the scheme of the day, right? We said this was the first kill zone of the day. Where are we trading in the scheme of the day when we open up this London kill zone?
In the premium of the day.
In the premium, right? And looking back over what price has done for the day, you can see that we're in a buy program and we're in the premium, right? So since we're in the premium, then what does the algorithm do? It engages with the buy side. We're looking at the liquidity from the prior session, right? So we're looking back. What are we looking back to, right? The high probability times of the session, right? If price is king, right, we're focusing on the stuff that's inside of the kill zones, right? That's where our eyes are drawn toward what's happening in those kill zones, because time and price. Time is the most important part, right? So when we look back at the Asian, we're looking at the liquidity, right? We're looking at liquidity. And at this point in time, just for this example, it so happens that, right, this low here to that high right there was the latest expansion leg of the bullish dealing range that we're in. Okay, we trade back down, take out internal liquidity, trade into the bullish order block, right? And we attack the buy side liquidity. And once we attack this buy side liquidity, right, what does price start doing? Right, inside the London kill zone, right, all the way up into the New York kill zone.
They started consolidating.
It start consolidating, and when prices consolidating, what do we call that? It's doing what?
Chop slop.
Chop
high
slop.
Resistance.
High resistance, but what is it doing?
Oh, it's generating liquidity.
Yeah.
Yes, we engineering liquidity there, right? And when we're engineering liquidity, is letting buy stops and sell stops build up on either side of the range, right? So inside this kill zone here, right, we were moving a little bit, right? When we got to this kill zone here, we're just consolidating. And then so this when we start this session, we're looking back to that session, right? We engage the buy side liquidity when we look back to that session, right? Since we engaged the buy side liquidity and didn't take out the sell side, right? This session right here has extended our dealing range, right? So now this is the lowest low. This is the highest high for our latest expansion leg right there. Okay. Now, as we come into the New York kill zone, right, we're in a buy program, right? And if you're in a buy program, what do you want to see first? You want to see price take out sell side liquidity. So as we open up the New York kill zone, we open up right here, right? So we open up there. We're just a little bit in discount of that range of the London kill zone, right? Very close to equilibrium into a slight discount. And as we open up the New York kill zone, right, price spikes just a little bit, but then it immediately drops down and take out the sell side liquidity from the London session, right? And when it takes out the sell side liquidity from the London session, it goes back down to the discount of our overall dealing range to a very ambiguous spot. No, a very calculated spot, right? We came down into a bullish order block. We came down into a inversion fair value gap. We came down into a bullish breaker right here, right? We came down to it and a new week opening gap, right? Not only did we drop down to all of these PD arrays, right, that's designed to support price. Remember, what do we say about this area right here? We want to see that area act as support, right? Right. So we coming down to this balanced price range. And then one very important detail that the algorithm offered today. And this is one that you always looking for. When you buy in a discount or you sell in a premium, where do you prefer to buy and sell? If you're buying in a discount, you prefer to buy where?
At the opening price?
As close as possible.
Or near the opening.
Below or as close as you can to the opening price, right? And as we dropped right here, right? What do we say the top of this purple box was? The top of that purple box was the opening of the day from 6 o'clock, right? And then when we look right here, this was the midnight open, right? That was our midnight open. I don't have a midnight here, but yeah, close enough for government work. All right. That right there, God dog it. I could have swore I changed that to mid. I did. Am I tweaking? Don't they say midnight? Line, yes. Man, what in the world is going on with that? There it is. Whew. All right. So coming into the New York kill zone, okay, what are we doing? What are we looking at? We're looking at the liquidity from the prior session, right? In this case, when we come into the New York kill zone, we open here, right? We're in between the liquidity of the prior session, right? Now, Tim, what if we would have opened up here and we would have been below the liquidity of the prior session? Well, let's say previous, because it's the one right before it. You would just keep looking over here to that one. That one there is from the same day, right? If we're trading outside of the range of the prior session, previous session, you just look over to the next one. The PD arrays don't go stale. So you just look back to this one. But in this case, we open up here, right? So we're looking at this lowest low and we're looking at this highest high to see if the market tries to sweep out some sell side liquidity, right? Why? Because we want to see it take sell side so that we can engage the buy side, right? And now why are we really looking at this right here? Because during the London kill zone, we came up and we set relative equal highs. What happens when we set relative equal highs or relative equal lows? This is a form of engineering liquidity. Why? Because retail sees that as a double top now. Ooh, that's strong resistance. So it's engineering liquidity. It go up, engineer liquidity, manipulate the price in the other direction, right? This is in the sense of what kind of model. When you engineer liquidity, manipulate the price in the other direction, and then engage that liquidity. What type of model? What type of model is that? What's that? Pig. What you said?
Sound like somebody was trying to say wig snatcher.
Oh, wig. That's a signature. That's a signature. That's a signature. No, I said, what type of model is that? We engineer liquidity, manipulate the price away to opposing liquidity, and then come back and engage that liquidity that we engineered. What type of model is that?
Power of 3.
Power of 3 is accumulation, manipulation, and distribution. Same concept, right? Accumulation, manipulation, distribution is the same concept. You accumulate liquidity by engineering it. You manipulate away.
Oh, that's the CERD. That's not it either.
Those are delivery methods. What type of model?
We'll 2022.
Say again.
Do you mean 2022?
They market maker models.
Market maker models. Thank you. What did Jada say? 2022. What did you say, Jada?
The 22 model. I guess it's almost
22.
similar. Yeah.
No. Well, I said, what type of model? When you engineer liquidity, you manipulate price away to opposing liquidity, and then you come back and engage that liquidity. That's a market maker
that's a
model.
market maker model. That's what that is.
Oh my God, I'm sick of this guy right here. So in the same concept, you see how somebody said power of 3? It's the same idea. Power of 3 is accumulation, manipulation, and distribution. You accumulate, you manipulate, and then as you distribute, the distribution layer, because you're coming to distribute above or below these old highs or lows that you created when you was engineering it, right? And when you look at it in the sense of a market maker model, this is your initial consolidation. You manipulate away to some old liquidity, then you come back up and engage with that liquidity that you created in the initial consolidation. It's all talking about the same thing, but we're putting so much emphasis on the individual pieces, we can't see the forest from staring at the trees, right? So as we engineered liquidity here during the London session, right? So now we're in a buy program. We've engineered buy side liquidity. Okay, so now we're coming into a new session. So we're looking at the liquidity of the prior session. Why are we looking at the high and the low? Because we're in between the high and the low, right? We're in between the high and the low. So we're looking to see what side the algorithm wants to engage with. We're bullish. We want to see it engage with sell side first, right? Just like when we came into the London session, we're in between the Asian high and low. We're bullish. We want to see it engage sell side first, but during the London, it engaged buy side first. It didn't give us what we wanted during the London, right? Coming into the New York, right? We're bullish, so we want to see it engage sell side first. It engages sell side first. Once it engages the sell side, we get below the midnight open, right? When we go below the midnight open, we take out sell side liquidity, right? Not only do we take out sell side liquidity, we take out time-based sell side liquidity. So we take out this low from the kill zone there, time-based liquidity, and we take out this low right here, which is internal liquidity inside our dealing range, inside the discount of our dealing range. So we're sweeping discount time-based liquidity below the daily open. And then how far do we go? We drop below the time-based liquidity down to the discount bullish order block and come below the 6 p.m. open. So now we're below the midnight open. We're below the 6 p.m. open. This is prime real estate for smart money to go long. And when smart money went long today, look what happened when the elephant stepped in the pool. Pow! Couldn't even participate because it just went up. It was up and it stuck. It was up and it stuck. And some days it's going to be like that. It's going to, when you come into 9:30 here, like we did this morning, we had our eyes on this engineered liquidity. We said the YM was really heavy. We want to see if it was going to bring this down, or if we was going to go back up and play six sister to the top side, right? Before we could even blink, it was going off without us. Didn't give an opportunity. Why? This was the opportunity before the 9:30 open. Sometimes it's going to happen like that, but it don't stop the algorithm from being the algorithm. Y'all see how price and time is fractal? When we first came in, we was talking about weekly candles and weekly charts, saying we start a new week. We're looking at the liquidity of that new week, right? And then we broke it down and said we had the bottom of the price range was efficiently, the dealing range was efficiently delivered. So we was looking at the latest expansion leg, right, for the whole weekly time frame. And then we went in and looked at a smaller fractal where we had a bearish price range. And then we switched to a bullish price range, and we said the lower half of it was efficiently delivered. So we started watching the latest expansion leg, and then we went down into the individual sessions, because this was from the daily level, because that's the daily high, that's the daily low. Then we went into the individual sessions, the first session of the day, the second session of the day, the third session of the day. And then we said how coming into, we set that this was our first session. We set a high and a low. We let it establish our range, right? Coming into the next session, we look back at the liquidity of the prior one. Oh, that sounds familiar. When we came into the new week, we look back at the liquidity of the new week, right? This session didn't give us what we wanted. It just accumulated and engineered liquidity. Coming into the New York session, right? We're looking back at the liquidity for the London session. Why? Because we're in between the range. What if we would have been outside of the range? Then we're looking back at whatever the liquidity is from a prior New York, a prior Asian, a prior whatever prior session is before where we are in price. We engage the sell side just like we wanted. Why? Because it's in a buy program. Algorithm get long at the bullish order block. Why? Because the bullish order block job is to block price, not letting these trap traders get out. Gone. This stuff actually worked, man. You ain't got to believe me. You don't have to believe me. You hear me? You don't have to believe me. That's all I got, man. I'm just hoping y'all got something out of it. I don't know if you did or not, but maybe it was good to me. It was good to me. That's all I got to say. And that's all I'm going to say about that. Do anybody got anything for me? Nope. Okay.
Question. Hey.
Okay.
Then I'd asked you in chat, and you said it's too much to type about.
Oh yeah. I had kind of typed everything out, but when it comes to if you want to trade on TradingView, right? If you want to trade on TradingView, buying the license for NinjaTrader, in my opinion, don't make sense, because you're gonna pay for the license through NinjaTrader. What that does is that gives you access to be able to use their desktop platform for life, right? You pay one-time fee. I think it's like $14.99 now. Back when I bought it, it was like $1,000, and I had like $100 off because I used Jason's affiliate link. So I paid like $900 for it, right? And so it gives you access to use their desktop app for life. You ain't never got to pay no more, right? Then, but you have to pay for your data, your market data. And but if you want to trade through TradingView, right, not only do you have, if you go buy the license, cause you'd be like, okay, I'm gonna buy the license because I want to pay a little less in commissions, right? Because I think the commissions, if you let me see, pricing. All right, so with the lifetime license, right, these are the commissions right here. So it's like, this is just for one. So you just double it to close, right? Because it's open and close, right? So if you got a lifetime license, right, when you open a position and close a position, right, it's 59 cents per contract or 9 cents per contract, right? However many contracts you got. But if you doing it for free, where you just deposit your money, you don't pay for the license, right? You're just say you're using TradingView to trade on. You just using Tradeovate as your broker, because I haven't seen a way to add on Tradeovate. I mean, TradingView trading in NinjaTrader website, but in Tradeovate website, there's a thing that says TradingView, but you got to pay. I think it's like $9 or $10 a month. You got to pay for that to be able to trade on TradingView by using your NinjaTrader Tradeovate account, right? So if you just put your money with them, right, these are your commissions, right? Because you ain't paying for the license, right? If you pay monthly, this is what you're paying monthly. You know what I'm saying? And these are your commissions. If you pay a one-time payment, it's $1,500, and these are your commissions. But I say paying this right here don't make sense if you're going to trade on TradingView, because in order to trade on TradingView, you have to get like the at least the essentials plan to make sure I don't be wanting to show the wrong thing. TradingView.com. Okay. Right. So with TradingView, in order to trade on TradingView, you got to at least get the essentials, right? And so when you get the essentials, right, the essentials, this here, right, and this is what they got 17% off right now. They be doing sales and stuff like that, but right now it's 17% off. And with 17% off, you're looking at like almost $170 per year, because TradingView is a per year thing, right? So let's just say $14 times 12, right? Because this is when you pay it up front, right? Billed annually. So you're looking at roughly $170 a year for the essentials plan, right? So if you pay $1,500 for the licensing, and then just to come over here and then just to come over here and trade here, now you got to pay at least $168 a year in order to trade on TradingView, right? And then but if you want like the seconds charts, right, you got to get at least the premium. And then this one here is almost $700 a year, because if you look down here where it says second based intervals, right, that don't come in until you get over here on the premium, right? But that's but through NinjaTrader, that's I I don't know if it's the licenses or the data, because like I say, when I got Ninja, I didn't even used to use TradingView when I bought Ninja Trader. So I pay for the data through Ninja Trader. It's like it's either $7 or $12 a month, and then the data for TradingView is either 7 or so. One is 7 and one is 12, right? So, okay, all right, let's do this right here. So, just say I'm gonna say, cause one is 7, one is 12. So I'm just gonna say Ninja Trader is $12 for the data, right? $12 for the data, and then you would have to pay for the Tradeovate add-on, right? And let's just say $10, right? So you're looking at $22 a month for data and the TradingView add-on through Tradeovate, right? And then the commissions will be the higher commissions over here, right? The 129 per mini and 39 cent per micro. Okay. And then if you get your data, and this is what you're paying, like $22 a month for however long you do it. Now, if you for a thing, but you also have, and then 168 a year. So what was that? What they said that was $14 a month, right? Plus, but this is a lump sum. So that 14 is a lump sum. So you got to pay that 22 a month as long as you're doing it, right? You're paying this 22 a month as long as you're doing it. But that 168, if you get the essentials plan, that's a recurring every year, right? You know what I'm saying? Like, now this is what it is now. So it'll probably be, it say you save $36. So it might go up a little bit more. You see what I'm saying? Because I don't think you don't get it on the discounted price. I don't believe. I think that discounted price is just the first time when you get it. And then when you build later, it bills you at the regular. Let me see. It says the full monthly payment is $16.95. The monthly price with the year subscription is $13.99. Okay. All right, so it ain't no it ain't no discount right now. They ain't got no discount now. It's just that's the 17% off when you do it annually. All right, so if you put it on annually, you're looking at 168 every year plus the 22 for your data, and you're trading on TradingView every month. All right. That's why I say it don't make sense to buy the license, because why pay $1,500 just to come over here and have to pay $168 a year on top of it? Because it's like, if you're using this platform here, you know what I'm saying? Now, the reason why I went with Ninja Trader is because it was a one-time fee, and I ain't trying to pay no annual subscription. And that's why I trade on. And then but people be like, well, Tim, you got TradingView. The only reason why I got TradingView because the gang wanted me to chart and do everything on TradingView. So I was like, as long as y'all support the channel through the memberships, I'll keep using TradingView. But as soon as the gang go away, TradingView goes away. Because that's just an expense that I won't need. So that's why I say I can't recommend nothing for you, because I don't know what you're willing to spend or what you're willing to buy. But these are the numbers. These are the numbers. I use Ninja Trader because that's what I first learned, and it don't have an annual subscription, right? I just pay my monthly data fee, which is it's either 7 or, because my TradingView is like 7 or 12. I got a Tradeovate thing where I pay for data that's like $7, and I got Ninja Trader where I pay, like I got so many different things that's paying for data through these different brokers. I be getting confused which one is, how much it costs, right? But
So even if we have the data through TradingView, TradeAvate still wants you to buy additional
no,
data.
you don't have to buy if you buy the data. That's what I'm saying. If you buy the data through TradingView,
Yeah.
you still gonna have to pay like $7 or $12, whatever the data is, but you have to pay that $10 a month for the TradingView interaction.
Okay, so I'm already on the premium with the data. I just get that big sale every Thanksgiving.
Okay, so you got premium and you paying for data through
TradingView. Right.
Okay.
And so the only thing I need to do is link TradeAvate to it. And so for that linkage, that's gonna be another
it's $10.
10 every month.
Every month. It's $10 a month. And then since you don't have the license, this is what your commission is going to be. Your commissions are going to be higher than if you have one of these licenses over here. Now, what I can say,
129, that's 129 to open and to close?
yes, open and then close. So it's two, whatever that is. My math ain't math. 258. What's that? 258?
258.
Yeah, 258 one contract round trip. And then did you know what I'm saying? And so it's gonna be, and then on top of that, it's like a couple fees, right? Let me see. They had a thing where it show you like the all-in, all right, the all-in rates.
Yeah, I have the all-in rates. I wonder if they the same. So, because for TradeAvate, I know it's the same company. Like for the micro NASDAQ, it's 95 cents on the free, and then 85 for monthly, and then 65 for a lifetime.
Is micro, what? MENQ right here.
Uh-huh.
Right. So yes, all in 95, 85, 65. So this is your all in, right? That's your all in right there. 95, 95, 85, and 65. That's your all in right there. Your all in cost.
That's opening. That's what I was trying to understand. So that's opening and closing.
No, that's one side.
So instead of the two something,
you double it.
It's one side. So okay. So that's still close to $2, but it's cheaper.
Yeah.
Than what we were just looking at. So and over, like I said, of course, you just do
it's you see what I'm saying? Because it's 39 cents. That's just and this is your all in. You see what I'm saying?
With all the different
with
fees.
the fee, yeah, the different fees. Right? The clearing, like the exchange fee, clearing fee, all that right there with the different fees. See these itemized fees, and then this your all in rate.
Yeah. So when the two something was for the mini, right? Yeah. Okay.
Yeah, it's because if you see over here, right, see how this right here says 37 cents. Okay. Then right there that say like 39 right there. So you got like you got the 37 here, you got whatever this is right here, and then there's the commission right there. So you got the God dog it. What is this? Keep popping up. What is this? Get out of here. Right. So you got there's the 39 cent right there, and then your other things there, and then with the all in, I mean, this is the all in rate. So that's where you get these numbers from over here.
Okay.
Right. And that's per side. Right. So we're gonna go 39 plus point 19 plus 0.37, 95 right there, 95 cents. See, okay. So you got your commission, then you got your clearing fee, and then you got your exchange fee, whatever that is. And then these the itemized fees, and then this is your commission, like commission, clearing, whatever, and then this is your all in. So every contract it's 95 cents. So if you open one contract, that's a contract. And then when you close, that's two contracts. If you open two contracts, when you close, that's four contracts. You see what I'm saying? So for every contract, it's 95 cents per contract both ways. So when you open and close a position, right? It's $1.90 per contract to open and close a position. So it's $1.90 per contract to open and close a position.
Okay. And so like you saying, even though you get like a, what's that,
So
30 cents savings, so to speak, at the end of the day, you bet it's offset by the 1,500 you pay up front. So plus, like you saying, the other fees that you paying.
yeah, and so in that case, since you already doing trading view, right? You already got the premium. You paying that every year, right? You got your every year what you paying every year, right? And you getting the data through them already. Now, the thing I suggest is look at the different brokers and see what their fees are. You see what Ninja Trader and Tradeovate saying, right? It's these are the prices for Ninja Trader and Tradeovate, and it's, you know what I'm saying, it can be pretty sizable. Because even with like the lifetime, right? When I be trading the NASDAQ, it's like $4. It's like $4 and some change per contract. You know what I'm saying? It's like four something per contract. Because if I look over here, where is it? E-mini NASDAQ right here, right? 218, right? So that's like $4.36. You know what I'm saying? $4.36 per contract, right? So them contract it is like the commissions add up fast, but that's part of trade. And that's way cheaper than what they had to pay back in the day. So you would just look at let's see, trading view be crazy. They sometimes they margin be like way high, but they make sure because I got a trading view account, but I don't trade futures through them. I say trading view trade station. I said trading view trade station. All right, pricing. You know, you be having accounts for this stuff. Sometimes you be going in, they be trying to make you all right, futures. All right, so $1.50 per side, zero commissions, and $1.50 per side. So and then micros is 50 cents per side for trade station. And their margin margin rates. Wait a minute. No, I want future. I want futures margin. Oh, future margin right here. All right. So futures margin. All right. So let me see. MEQ. All right. So yeah, see they margin. It like you need $335 a contract for the MEQ, and on Ninja Trade and Tradeovate it's $100. So their margin is higher, right? It's 10%. There is like it's 10%. So 10% of the where is it? Right here, overnight margin right here. Right. So it's 10% of this, right? initial margin. They call this they say long overnight margin, but it's actually called initial margin. So the initial margin for the MNQ is $3,357, and 10% is $335.70. That's where you get that initial that intraday margin from. So it's 10%. So on the regular NQ, that 10% would be $3,000. You need $33.57.80 to open one contract through them. That's why I say they margin be crazy. With and then let me see. What's that other one? What's that one that ICT used to talk about that he was doing, and he was gonna have his son trade with? No, I don't like it enough to keep it with it. I mean, I don't got to pay for it. I don't have to pay for it to do the charting. I could chart on the free one. I don't know how long ago you asked that, but I can chart on the free one. Only reason I pay for it is because AMP. That's it. Only reason I pay for it is because you know what I'm saying, showing everything on trade, like the seconds charts, the charting, all of that stuff. That's what everybody used to see. And so that's the only reason why I got it. But I can do all the charting on the free one. AMP futures. All right. AMP futures. And what's the name was Tremaine was trying to switch over to AMP, and it was like getting like super complicated for him. And so he just switched back to TradeStation. Okay, they're not gonna tell me we'll match or beat any written commission quote. Okay, they talk about matching or beating, so they ain't gonna post their prices. Margins. All right. So for the micro is $40. For the that's the ES. Right here. So it's $100 for the NASDAQ. Same thing as Trade-Evate, right? It's $40 for the ES. That's cheaper than Trade-Evate. I think it's $50 for Trade-Evate. So it's $100. Their margin is pretty much the same. This is cheaper. It's $500 on Trade-Evate, but it's $400 there, and then it's $1,000. That's the same, $1,000. So their intraday margin is the same, in line with Trade-Evate. On AMP, they not showing the commissions. They just say we'll match or beat any written. So this right here may be an option, but I don't know what their actual rates are, because they just say we'll match or beat. You know what I'm saying? So this is another one, but because since you already got the platform, you just need a brokerage to put your money in to link to the platform. You know what I'm saying? That's all. You don't need to go buy another platform. And then if you matter of fact, let me do this right here. Oh, I already had it open. All right, do this for a second. Make sure. All right, make sure I don't be showing that crazy. Okay, you go down here. These are all the brokers that you can link to them right here. Right, and that's TradeStation. That's the one I'm looking at. They got them as featured. That's the one I was showing. It's like crazy. They go AMP right there. You got AMP. They go Trade-Evate. And then these, see, they got Ninja Trader right there. But when I go inside Ninja Trader, like when you go inside of Trade-Evate, when you go to add-ons, there's a thing that says trade and view, like trade and view trade. And it's like, not, but I don't, when I log into my Ninja Trader, I don't see that it don't exist there. I don't know where it is, but they got NinjaTrader here. You might be able to look it up and see if it's a video on how to connect it, but because NinjaTrader ain't always been there. This is like recently added, but the Tradeovate been there. And I don't know a bunch of these right here. Right. I don't know a bunch of these, so I wouldn't put my money in them. The only ones I know is Interactive Broker, Trade Station, AMP. I've never worked with them, but I've heard a lot of people talk about them. Tradeovate. I heard of Tasty Trades before, but I ain't never worked with them. Rest of them, play it at your own risk. Right. So it's just all about where you're gonna get the best best bang for your buck. Right. And Kim said she like AMP, no problems yet. And I know Michael used AMP. You know what I'm saying? So look into the one where you're gonna get the best bang for your buck. And then go from there.
Thank you. Okay, because I'm gonna check out AMP because I was looking at Tradeovate. Printing and Tasty Trade is expensive too. As far as what they were charging, once you start looking at all their fees, they got it too.
Yep. But do anybody got anything else?
Yeah, I have another question here, Tim. It looks like, so on your screen right now, it looks like just in the extended hours, there's some consolidation. But in the discount, looks like in the discount, there's a fair value gap and then some other kind of prior session highs and lows. Do the fair value gap in the discount and the prior session highs and lows in discount, do they kind of already suggest a disposition for tomorrow trading, or is it same as always, let the algorithm kind of direct you to what you're going to do?
Okay, you fixed it. You fixed it. Yeah, you just I was about to get him. I was about to get him. Yeah, so you just want to let the algorithm whenever we're engineering liquidity, right? Yeah. You just want to let the algorithm tip its hand. Let it tip its hand first. Like, don't never try to, when you see us go into a consolidation, don't never try to jump the gun, especially when you're on lower time frames. Never try to jump the gun, right? Let the algorithm tip its hand, because if price does this, then it should do that, right? Even at times, like I was saying here, if you didn't get in pre-market, you didn't have an opportunity to take advantage of this trade. You know what I'm saying? Unless you just kind of jumped in. Because even if we look at like a 1 minute time frame, right? If we look at a 1 minute time frame and come over here to this morning's price action, right? It was like pretty much straight up, right? And at this point right here, you got 1, 2, 3 down close candles on the 1 minute time frame from 9:30 up until almost 10 o'clock. 3 down close 1 minute candles, right? So at this point, when you get that down close candle, personally, if we start here and we're there, right? I'm not buying. We're in a premium. I'm not buying there, right? That's just chasing price, right? This is just chasing price. So even at times like this, you may look and say, I didn't get a chance to participate. Cool. You're not going to get every trade. The market going to always present other opportunities. But whenever we get to a point when we're just consolidating like this right here, set an alert and be like, look, based on, okay, so looking at this price right here, right? So looking at this price right here, right now, in the short term, right, we're in a sale program, right? In this short term right here, the sale program is active, and that sale program, right, is a part of this bullish dealing range right here, right? So this is our bullish dealing range there, and we've switched to a sale program, right? Because we're retracing back in, right? And you say, Tim, how does that work? Anytime your higher time frame got a reason to come back to the discount, the lower time frame gonna switch to a sale program, right? Because it has to retrace back to that discount. All right. So right now, this is our highest high. This is our lowest low of this bearish dealing range, right? all of this right here is efficiently delivered, and we've expanded away from that area there. So on the bearish side of it, right? On the bearish side of it, you're looking at, right, this range here, right? This close enough for government work. It probably ain't anchored perfectly, but you're looking at this range right here, right? This is your dealing range that you're looking at on the bearish side of it, right? So if you're bearish, right, what do you want price to do? You want to see price engage buy side and give you a reason to sell in the premium, right? We got buy side liquidity. Come here. We got internal buy side liquidity here, right? We got internal buy side liquidity here, and we got some internal buy side liquidity there. But this is, right, we got this peak sitting up here, right? That's the juicy buy side liquidity, right? And if we look right here, right, we got us a SIBI resting above that buy side liquidity there. So what's important about this SIBI here, right? This is the first SIBI we made when we took off. So for the bearish narrative, right, if price comes back up here to take out this liquidity, I want to see it revisit this fair value gap. That's an important fair value gap, right? I want to see it revisit that to sell off of, right? Right, for the bearish stance. But I want to see price take out this buy side and then sell off of it. Why am I looking for that for the bearish side? Because in this case, we've switched to a sell program here, right? We switched to a sell program and we haven't taken out any liquidity on this time frame right here, right? The liquidity is way down here, right? So I'm not going to try to reverse this sell program until I come and gauge some liquidity, right? So that's why I'm looking at it right there. Now, that's just looking at this 1 minute time frame. So now you want to go higher, right? When I look at a 15-minute time frame, right? Looking at a 15-minute time frame, I see that, right, we've already created an inversion fair value gap, right? We created an inversion fair value gap here, right? So we've come down and we've created an inversion fair value gap. And then on this 15-minute time frame here, right, this is the first bullish fair value gap that we got when we displaced the weight, came above that high and then dropped. So if price on the 15-minute time frame came back to a premium, right, I want to see it use this as an inversion fair value gap to push me back down, right? Because we've engineered buy side liquidity right here, right? And we dropped down, but we haven't taken out any sell side, right? So I'm looking for price to come engage some type of sell side, but I'm remembering we're in a buy program, so I'm not trying to force it to that low or try to force it to that low. I'm monitoring what do I have in the way, right? So if I'm shorting, right, inside this buy program, okay, we got a sell program here established. I'm looking for it to engage buy side, and then if I'm shorting, I'm taking it down, right? We have this area here, right? This is a balanced price range. We got bullish breakers in there, right? I'm scaling something here, if not taking it all the way off, right? If we continue to push through, right? If I leave some runners on, I'm scaling something when I get to this inversion fair value gap and this bullish fair value gap right here. Why? Because I have a bullish breaker, a bullish order block sitting right here. I'm especially watching the down close candle right there, and then there's the sell side liquidity right there that I'm looking for it to manipulate to, because we've engineered buy side liquidity. But I'm watching all of these algorithmic PD arrays on the way down, because we're in a overall buy program. If we was in an overall sell program, I wouldn't care nothing about these bullish PD arrays. I'll be looking for a short back to the sell side, because I will be trading with the direction of price, right? I'll be trading, but since it's bearish in this short term, I'm trading against the direction of price. So I'm very is like in and out, in and out, in and out, in and out. But you don't want to force anything here because we just engineering liquidity. This is the algorithm prepping, telling you, okay, I'm going to show you something soon, right? But it's just up to us to be patient because we want it to happen during the session that we're watching price. But as we walk through price today, you see it took the Asian, the London, and then coming into the New York for this whole thing to set up and then play out.
Right. Okay, I got it. Appreciate it.
Mm-hmm. Yeah, so just let the algorithm show you what it want to do. And it's the Asian session, and we've just been consolidating. It's almost 8 o'clock. It might start moving in a little bit. At 8 o'clock, it might start moving some, but let the algorithm show you what it want to do, right? Let it show you what it want to do.
Okay.
And then when we look at this, because it's a pretty big range right here. So we come from the low to the high there, right? And the reason why I'm going all the way to this low right here, even though we got all this back and forth inside there, is because we just shot straight up. We didn't come up here, make a high, and then take off, right? We came from the bottom straight up. So I'm just looking at this entire range right there. And this right here is equilibrium right here at this old weekly high and old daily high, right? Right there, we're coming back to equilibrium right there, right? And then we're coming back into the discount. Right. So that's why I say you're being careful around here, because now for the bullish stance, you're coming back to a place where you should be buying. Right. And until we get down here, right, that right there, trading below this low, as of how price stands right now, that's your bearish breaking market structure on this 15-minute time frame. Right. Because here, trading below this right here, right, we didn't trade above that high. We had a failure swing right there. All we did was engineer some liquidity right there, right? So if we would have taken out that high, right, then this right here would have been, okay, we got a bearish break in market structure now, right? But right now, we just engineered liquidity. So engineering liquidity, the algorithm can rip back up that'll take that before going down. You see what I'm saying? Because that's dangling the bait right there.
Yeah.
That like I'm always cautious of. That's why I call this a shift in sentiment, because it lets me know. Because you hear a lot of people say, "Oh, we got to break in market structure." Yeah, we did break the structure, but we left the liquidity. So for me, I call this a shift in sentiment, because I know that high didn't didn't take out liquidity. We left liquidity up there, right? It's a failure swing. So we got a mitigation block here instead of a breaker. You see what I'm saying? And so that's why I know, okay, there's engineered liquidity up there. I don't like shorting equal highs. I don't like going long above equal lows, right? Because that's engineered liquidity up there. And so that's why I say you want to play it real safe when you get down in this area, because now you're coming back to a discount. And for the buy program that we're in, this is where you should be buying, right? This way you should be buying. Not saying if it get down here, you just jump in there and buy. You want to look for your signatures, but you know what I'm saying? You want, just like here, when it came back down to this discount, right? It gave you it, like you didn't have to, you didn't have to buy here when it came back to the discount of this area right here. Why? Because it came back to the discount, it engineered liquidity, and then it gave an opportunity to participate at a certain time. See what I'm saying? Inside the New York kill zone, it gave an opportunity, opportunity to participate in this retracement back down to the discount, because we retraced back down during the Asian, right? We came back to the discount during the Asian. Okay, boom, we've come back to the discount, right? But then we come to the New York session, right? Price is still bullish, so it comes back down and give the New York session an opportunity to participate in the move that it forecasted here, right? When we got our institutional market structure there, came back down and it forecasted the move here, gave the opportunity here at the right time. Because like we always say, time is king, right? We always want to remember that time is king. You always want to be looking for your opportunities inside kill zones, right? If you're not inside a kill zone, don't be looking for opportunity, right? Understand the kill zones. Certain kills, the New York kill zones, 8 times out of 10 are going to move a lot more than the Asian and the London kill zones. It's more volatile. The swings are going to be much broader. You get big, beautiful moves, right? But the algorithm still doing the same thing in these small moves, doing the same thing in these not so small moves, doing the same thing in these larger moves. So you're looking for your opportunities inside these windows here, right? Your kill zones. Then you have certain things that happen inside the kill zones where you're expecting certain price spools. Is it going to spool on the time frame you're watching every kill zone? No, but it's happening on some time frame, right? But it's all time and price. Everything is about time and price. When you see it set up, right? When you see just, and matter of fact, going back to what I was talking about when I said it forecasted right here, right? So this little area here, we don't trade patterns, but looking at this little move here where we came down, took liquidity, right? Came down, manipulated out the low, right? And why do we want to see it manipulating out the low? Because we're bullish, right? So we come to the discount, right? Run up, take people out who was on the right side, trick people in to go the wrong way, engineer more liquidity, and then we go up now, right? So we're looking at this, right? That high there, right? We're looking at this inversion fair value gap here, right? Let me draw this out properly. And I'm going, because I'm talking about time here. Talking about time. Okay. So over here, we drop down, right? The algorithm does stuff at certain times. You have when time meets price. Okay. So we drop down here, right? And we take out the sell side. This moves us back to a discount, right? This right here is price action, right? The algorithm has already extended our bullish dealing range by taking out the buy side. It rejected it. We come down back to a discount, right? So we move back to a discount. What does smart money want to buy? Smart money wants to buy in the discount, right? So we drop down here. We come back to a discount right there, right? Remember that. Now we come over here, right? We trade up there, come, you know what I'm saying? Come back up inside this bearish dealing range, come back up to a premium, come back up to this this bearish fair value gap right there. Come back up to our bearish fair value gap, reprice that entire imbalance, right? And then we drop down here and trade below that low right there. Okay. Smart money is manipulating out these stops. They're buying these sell stops. Smart money is buying in the discount, right? They're buying now. This is when smart money is buying in the discount. Smart money is starting to, you know what I'm saying? It's ready to turn back around here. How do you know it's ready to turn back around? Because as we were coming down here, right? See this SIBI right here? That SIBI right there, that is the first bearish fair value gap that was created at this anticipatory reactionary point as we traded down and swept these lows. Now we've took out our buy side, extending our range. We've moved back to a discount, right? So this is where smart money wants to get long, right? We manipulate out the lows. This manipulation leg there, this right here is the first fair value gap inside this manipulation leg. You extend that out, right? When we extend that out, right? That fair value gap right there, we extend that out there. Now, we do all of this trading here. And when time meets price, we come into the New York kill zone, right? Here's the New York kill zone right here at 7:30. Right here, we come into the New York kill zone. And then right here, this is the 8:30 news embargo lift, right? Because I always focus on 8:30, but the kill zone actually started at 7:30. But coming into the New York kill zone, price drops down to a very ambiguous spot. No, 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 no. It traded back down to that very first SIBI inside that manipulation leg at this key point, right? The algorithm has done all of this to let you know that I'm turning it back around. This is your institutional order market structure right here, right? This is your institutional market structure where you got your long-term, your intermediate term low right there. There's your institutional market structure right there. What make it institutional market structure? Because the narrative that we are bullish and price has extended the range and traded back down to a discount. Now that it's in a discount, the institutional market structure shows you that it's ready to go back up. So now here inside our range here, we can extend this up right there. And then as you see, right, when we go up here, right, we drop right back down into, matter of fact, let me add these on. Let me add these on just so we can see it where, man, I ain't got no room. Okay, since I ain't got no room, I'll just get another Fibonacci tool here. I get another Fibonacci tool here. I'll come there. I'll come there like that right there. And when we look here, we come back down, right? For our overall range, we come back down in a discount and we drop back down to that first SIBI that on that manipulation leg, and then price, if we look there, right? Yes, price wicked outside the low of it, right? Price wicked outside the low of it, but when you look there, it's just below the halfway point, and then the next one opened up above the halfway point. So you can see it was trying to get back up there, but we gapped these 1 minute candles. So when it closed there, the next one opened up right above it. So you can see it was trying to get back up there, but it's there, and then it don't look back, right? And then if you look at from like we've come back down, but when did that happen? When time came back and met price, right? So because if you look over here, right there, right, we trade above, right? We trade above, we get above it, that first one, right? We stop there, bumping up against it like it's going to push price down, right? Then we gap up above it, but then we come down, close below it. Then we close back up above it again. Then we never even come back to it no more, right? Come here, drop down, don't never come back to it no more. Why? Because it ain't time to. You see what I'm saying? It ain't time to get back there yet. This right here is starting the Asian session right here. This right here, this is like during like the New York lunchtime, right? This is during like the New York session right here, prior session right there. So it ain't time to utilize this yet. But when we come back into the New York session, right here, when we was over here, we set this up during the New York session. Now, it ain't just got to be from New York to New York. It's the narrative. But in this case, the narrative of this right here is we set this up during the New York session, right? And then when we went into the next session, which is the Asian, right? We never came back down to it. When we went into the next session, which is the London, we never came back down to it, right? When we go into the next session, which is the New York, we came back down. And where did it stop? Right there at this area that's supposed to support price. You see what I'm saying? It wasn't time for it to come there yet, because during this time, it didn't go. During this time, it didn't go. But when we got to the next session, it went. Right. And when we got into this session, what did it do? It manipulated out the lows. Going into the Asian, it took buy side. Go into the London, it took buy side. Coming into the New York, it took out sell side. You want to see it take out the sell side because we're bullish. When it took out the sell side, it went back to the area it's supposed to, because time met with price. And even though we've traded up and down through this all this time, Ant-Man know how to look through all these candles and know that the algorithm created that right there to be used as support at the time when the algorithm says so.
How is there a way to anticipate that it would have been in that kill zone that it returned to that fair value gap?
No, I'm just gonna say no. I don't know of a way to anticipate when it's going to come back. The only thing I say is look at the signatures to let you know when the algorithm is ready to use it. That's why when we go into a new anything, we're looking for the manipulation, right? So coming into the new session, we're looking for the manipulation, didn't get it. Coming into a new session, we're looking for the manipulation, didn't get it. Coming into a new session, we're looking for the manipulation. We got it. Now that we got it, now I'm looking for this. I'm based off my analysis, I'm trusting this to support price, right? So I don't know of a way to forecast when it's going to come back. Michael hasn't taught that. I've seen him do that. I've seen him say it'll be here. And he'd be like, draw out the first presentation from Tuesday and stretch it out. And then it come all the way back down and stop right at that first presentation on Tuesday. I'll be like, how in the world did he know that? Right. But it's just one of the things where he hasn't taught that. But so the way I get around it is I'm just looking for the manipulation, because if you can spot the manipulation, you can get in early on that distribution leg. Right, it can be manipulation up or down, but if you're bearish, you're looking for the manipulation up, and then you can get in on our distribution leg down. If you're bullish, you're looking for the manipulation down, then you can get in on that distribution move up.
I got you.
And that's where the patience come in. The patience, it's hard sitting through all this right here. That's why I tell people, don't sit there and watch them candles. If you're not disciplined enough to just, because I'll sit here and watch the candles for like 2-3 hours just because it's like I be trying to condition myself into understanding how it feels to wait for this to play out. You know what I'm saying? And I've gotten to the point where I don't want to push the button if I don't see my setup. But if you don't understand how, if you don't understand how long it takes for this to set up, then it's like you're going to be very impatient and try every little spike like this right here get you. This will get you, right? You like, okay, we already ran sell side, we fun to run up, right? But but once you watch it enough, right, it's certain things that you start anticipating to see. Like, for example, here, how we came up here and then we came down and took this sell side right there. And then as we were going up here, right, like gang, no, I always say, I want to see if we're going to engineer liquidity or if we just going to touch it and then pull back. Because if we come up and engineer liquidity, that really make me want to see it come down and sweep some short term to go long. Why? Because that's the wig snatcher. We go up in the direction I want it to go, engineer the liquidity. Then we come down and take out the sell side and go up. So if I see that engineering liquidity, I'm immediately looking for what in the discount can I buy off of after we take out that sell side, right? Wherever the sell side is, if the sell side there, if the sell side there, if the sell side there, how far beyond that sell side can we go? Right. I don't know if you ever heard me say that. I used to say that a lot. How far beyond that swing low can we go? How far beyond that swing high can we go? Because I'm looking for what below that low can I buy off of?
Right.
Yeah. Anybody else got anything else? Yes, you can message me. Oh, that's somebody else. All right. All right, man. That's it. We've been on here. Sorry for keeping y'all forever. We've been on here for about over 2 hours tonight. Been on here over 2 hours. Hopefully y'all got something out of it. Tomorrow is, what did I just do? Something shift. Oh, all right. Tomorrow is Tuesday, so no price action. I mean, no tape reading tomorrow. I don't think I have anything on my calendar. I have to check my phone. But I'll see y'all at 6 unless Chris and them run long. It might be a little later than 6, but if he don't run long, yeah, my partner just texted me, said he great information. If it don't run long, I'll see y'all at 6. If it run a little long, it'll be a little later than 6. And if life start lifing, y'all know how it is, man. So until the next time I decide to get on Al Gore's internet and share my thoughts on this thing they call price action, it's your boy Timothy Lee Rogers Sr., aka Aranya Grande. That's his big spot if you know our blood span. Yo, y'all be safe out here in these straight streets, man. Gone. Yeah.